Fed Chair Jay Powell just wrapping up his news conference after the central bank raised rates by 75 basis points for the fourth time in a row. Rates now at the highest level that we have seen since 2008. But it was Powell's commentary that really sent stocks on a wild ride over the past 45 minutes or so. He was trying to strike that both that dovish and hawkish tones, going through some of those headlines as to why we saw equities bounce all over the place. The driving factor why we're in the red at this point, with the Dow off 139 points, and Powell saying that it's very premature to think about pausing rate hikes. On pace for future rate hikes, he said that there's still ground to cover. Ongoing rate increases are appropriate, at least at this time. He also said that the ultimate rate level will be higher than previously expected at the last September meeting. And pairing that with that dovish tone, too, Dave, it was interesting because the market really wanted to hang on to anything that they could in terms of a dovish tone from Powell. And we did see that, and we saw it reflected in the market earlier this afternoon when Powell did come out and say that he could potentially, or the Fed could potentially, pause rates at the December meeting or at the following meeting in 2023. So they're trying to figure out exactly which way the Fed is going to go.
Yeah, again, the markets, as I said earlier, kind of that guy walking through the desert, just desperate for any drink of water. They took that one sip and raced up, but then Powell reiterated, not just once, but twice, again, that word that you just said, premature. It's premature to think about pausing, and that's what really is the big picture takeaway. And if there's two, and I'll throw this one to you, Rochelle, he reiterated that, again, this was also twice, and that's why it hit me, that if we over-tighten, we have the tools to respond. In the other case, we will entrench inflation expectations. That's what really gives you a sense of the direction moving forward for the Fed.
I mean, I will say in this meeting, we heard much more about the lag effects than we've heard in previous meetings. Obviously, that's a concern that we've continued to hear from some economists and investors as well. And he talked about the three questions that are front of mind: how fast they're moving. He said expeditiously, but he said that's less important than the other two questions, which were how high, and he said sufficiently restrictive to reach that 2% target over time with inflation, and then how long to remain at restrictive levels. And he said that time may come, that there may be discussion about it at the next meeting. But then, as we mentioned there, we also heard him saying, look, it's very premature to be thinking about pausing. So he was clearly trying to walk that fine line there. But as we saw from the market reaction, we did see the NASDAQ turn negative first, followed by the S&P. But it's when he talked about it being very premature that we then saw the Dow also falling into negative territory as well. He talked about inflation being the possibility of it being entrenched. He said that there was no clear way of assessing that. But as you mentioned there, that he could use the tools from perhaps over tightening versus not doing enough and then having to keep going back and forth and allowing inflation to become entrenched. So he tried to walk that tight line. But as we see from the market reaction, markets not really on par there, definitely a lot more hawkish perhaps than they were expecting, Shauna.
Certainly looks like that, Rochelle, with the NASDAQ off nearly 2% right now.